everyone. We are Mortgage Pros 411. I am Audrey Boisno with my co-host Kevin Casey. Hi, Kevin.
Hey, Audrey, how you doing?
We are joined by two, not one, two mortgage educators, professionals. We have Dave Luna on our left, and we have Anthony Johnson on our right. Good morning, gentlemen.
Good morning.
Morning.
Good to see you. So, who is Anthony Johnson, you may wonder? Well, you see him sitting at booths at conferences, and if you are ever lucky enough to set up an NMLS class, he is your guy. He is extraordinary, and he knows a lot about the industry too. So you might notice a blurry background on Mr. Luna today. He's at an airport, so he may jet off at any moment, so stand by. But in the meantime, let's take a dive into this, shall we?
You got any announcements first, or you want to do
Who was our guest last week? Dan Habib with Mortgage MBS Highway. So we had a great conversation with him, and it was really interesting because we had a few weeks ago, guys, we realized that we were a little cranky with what was going on in the industry. We decided to turn everything into rainbows and unicorns. So then Mr. Habib arrived just at the right moment to inject a little reality, just as things were turning green in the markets, and we were starting to see some improvements. Today, however, he is not here, and it is red, red, red. So the market is the market, right? It just is what it is. You can't control it. It just is what it is. So what are you seeing that's working out there with LOs who are closing loans? What kind of loans are they doing? Let's start there.
And who's that question for? Was that Kevin or me?
It's for you. Just assume they're all directed at you. It's all about you until you leave on an airplane.
Okay. I just recently came back from Florida. Before that, Louisiana. I'm on my way to Texas. That's why I'm at the airport. What are loan officers doing that's working? Again, probably back to basics, doing FHA loans, like those, helping those that are in bankruptcy, doing a lot of HELOCs. Believe it or not, there are some refinances that are still going on, and obviously, purchases if we can find inventory. So a mix of everything, reverses as well. Right now, hey, if it's a loan, the loan officers are doing them.
Yeah, so I read in Chrisman this morning, 8.6% of the population moves in any given year. 8.6% of 300, what's our population now?
350 million?
I mean, you got people moving around.
Some of them move together, though. So
what?
Some of those people move together, I'm pretty sure.
Oh, really? Oh, I'm sorry. I thought that the 6-month-olds were moving on their own. Please. Okay. So you're seeing loans happening, right, Dave?
Yes, we are. I mean, obviously in the industry, there's been a major downturn. I mean, everybody understands that. People that are at a 2 and 3% interest rate are not leaving to go, 10 miles to get a 7% rate today. I mean, that's not real. But like you just correctly mentioned, there are people that have to move because of work or whatever. And so if it's
Divorce,
still 8 or 9, pardon?
Divorce, death.
Unfortunately, any one of the big D's.
Yeah,
and so, there is still purchase business going on there. I recently closed a loan with an individual that was from out of the country that is relocating here. And so, again, for reasons, whatever reasons are out there, yes, people are moving and they do need to take out a mortgage. Not everybody wants to rent.
Yeah. Well, and again, if you're doing blended rate scenarios for your borrowers, then you will often find if you can get that far with them, because some people don't even want to hear it. I get it. But if you can show them that, they're about to go in default on $50,000 in credit cards, and that keeping their 2 7/8 mortgage may make no sense at all in the bigger scheme of things, that's a good conversation to have if you can get to them first. And I think that I had a situation last week where I had a borrower who did something really dumb and then called me 6 months later. And so I'm like, you know what? I felt like it was partly my fault, because what if I'd called him sooner? What if I had said, hey, what about this option? So again, we've got to get ourselves on these call schedules. We've got to be reaching out to clients, and you should see, like, I've been doing it. Dave, I had told everyone that I am going to put my money where my mouth is. I'm actually doing the things that I'm preaching. Can you imagine? And so I've been making outward calls, and people are so happy to hear from me. It's great. It feels good. Now, if they go, who? Or I thought I told you never to call me again. All right, maybe don't call him again. But in the scheme of things, people love to hear from you. They want, and especially if you're just calling to say hi.
Yeah.
Imagine just call to say hi.
Yeah, just stay in contact with your database
Yeah.
is always a very, very positive thing. And again, you have no idea what's going on in people's lives. Maybe it's a mortgage, maybe it's just to reconnect. You're
Yep.
exactly right. Just pick up the phone, call them, just visit with them. You're exactly right.
Yeah. Don't call with an ulterior motive. I know that some people think that, oh, you have to have some sort of mission. I mean, you can have uh, touch points that you want to cover, but make sure it's genuinely something that you're reaching out for them, not for yourself.
Hey, Dave.
Yes, sir.
In your class this year, you have a whole section on low down payment programs. And we were teaching that last week and a half ago. And it got pretty good reviews from our attendees. One of the attendees actually was that's what he was focusing on, and that's where he was getting most of his business, was the 5% down, low income special programs. What are you feeling? What are you getting from your students in the classes that you're teaching that this year?
Well, one interesting thing that's going on right now in Texas is you have builders that are actually building smaller homes. So we used to think, because of COVID, people working from home wanted to have more square footage. That is not what's going to happen in Texas. Sorry about the overhead. I'm at an airport. And so Lennar in Texas is building 350 and 600 square foot homes to get the price down to be about $130,000 for the entry level 350 square foot home. But if you look at a 7% interest rate after the down payment, of course, those mortgage payments on a home are less than $1,000 a month. And so you do have some builders. I mean, Lennar's a pretty big builder. You have some builders that are saying, hey, if affordability is the issue and that's what people are clamoring for, let's build them what they want. And so that's a solution. So down payment assistance, smaller homes, first-time home buyers, give them what they want. And Lennar is doing it right now.
How many kids can you fit into a 350 square foot house?
But then again, how many, of these first-time home buyers have kids? I mean, how many are married?
How many want to have kids though? So it's interesting because
it's a good question.
I've got a single borrower right now who's put a few offers on places and can't get into anything. And she was looking at something that was 600 or 700 square feet and finally decided it was just too small. Like it was not. So
it's not for everybody.
I'm curious.
No, you're exactly right. It's not for everybody.
Keep us posted on that, though. I have not heard of builders doing this before, and that is fascinating. And so
we have them in San Francisco with the condos.
Yeah, they're just sitting there though. The one
I know. I was talking to a contractor over the weekend. He's one of the guys that builds all these small condos. I'm like, so I know the government's pushing you guys to build these things, but who's buying them? Because who wants to move out of their 1-bedroom apartment into a studio that they own? It's a hard move, especially if you got rent control.
So another thing that I'm seeing happening, and this comes from Freddie Mac, is Freddie Mac, especially on ADUs, they will finance the ADUs. Okay, now listen, this is a purchase, right? So the property has an ADU. We understand with old guidelines, if you rented to someone, a boarder, you had to show it on your 1040s. You had to prove with, leases that you did that. No. Freddie has a program that I barely learned about, and I thought it was super, super cool, especially with an ADU. One, you don't have to have a track record of having received rents. Two, this is not border like a room down the hall. This is an ADU. Three, on the appraisal, the appraiser has to show what would be market rents for that. And next, if you have a rent, not that you've ever rented before, you don't have to have a track record, but if you have a rental agreement that shows the renter, as soon as you buy the house, will pay you X number of dollars, you can count that towards your DTI on a Freddie loan. Folks, I did not know that before, but I'm thinking
We'll
I'm
do a
thinking
dive
with
into that. That's great.
I'm
Yeah,
thinking
that's
with
a great
ADUs.
program, but isn't it the rent counted at 50%, not 75% like on a regular?
No. So again, we are short on time, and I do apologize. I didn't know we were going to go down this road. However, we're talking about what is working out in the industry. If you go to Freddie's website, you can get more details, more info. And again, Audrey, like you're right, it may be another show, but I raised my hand and I said, no, you mean they have to show it? They go, no. You mean you have to have a renter in there now that you're buying it and the renter's been there before? Freddie said, no. I said, wait a minute, you mean if this was like brand new and you had an ADU and you've never done this before, I can count that ADU income, the rent, towards my DTI to qualify for the house? And Freddie said, yes.
Wow.
And I was blown away. I did not know that. I
Well,
did
yeah,
not know that.
We'll get on that for sure.
Yeah. Well, we were in DC. They had talked about doing it 50%.
I think that was FHA, Kevin.
Was it FHA?
So yeah.
Interesting.
So yeah.
Wow, that's big.
Here's another thing.
I've not heard that. I've not heard that from Fannie, but it is a Freddie product. So again, the lender that you're going with is the lender approved to go Freddie. And so again, there's going to have to be, like you said, Audrey, a little bit of homework done, a little bit of research to make sure that we got everything on there.
Yep. And how are they going to comp those properties? Like, do you have to find a place that also has an ADU and blah, blah, blah? So,
well, looking at the chat, it looks like someone's already done that for us.
Yeah, they pulled up the link for it.
That's great.
We'll have to share that on the YouTube.
Yep, that's awesome. Thank you. I just want to say something just because it came up again this weekend where so as we know, California had the CalHAF had rolled out the Dream for All program, which ran out of money in about 32 seconds. And then they said it will never, ever come back. And now it's supposedly coming back, but it is not the same. And there was someone who did a workshop this weekend for first time home buyers and invited people and had people show up, and they're acting, like sort of under the guise that, hey, this is going to come back. Okay, just to recap, people, I talked to Molly Ellis with CalHAFA recently, and she said, under no uncertain terms, it will not be the same. It could be something like a lottery system where it is very uncertain what the terms are going to be, how it's going to roll out, who's going to get it. It's going to be very random. And they're not even going to have the guidelines until fall, which I guess we're in September. When does fall officially start? So anyway, when they get their guidelines, we will talk about them. We will let you know as soon as we've got them. And then it's not going to the program won't roll out till the begin next year. I don't even know if it's the beginning of the year. So nothing is certain. I want to be super, super, super clear about that, because people don't mislead your borrowers. Don't tell them that this is coming back. And for goodness sake, if we are going to continue to see the appreciation levels at the levels that we're seeing them, it may not pay to wait until next year to maybe get a program where you're sharing equity. I was walking through the math on this with someone a few days ago, and it's like this is definitely for a very particular person where it's really going to work for them, and whether it really makes sense, and is it going to appreciate enough, and how long does that take, and how long that there are a million questions for something that may or may not ever happen for your borrowers. So there are plenty of affordable down payment assistance programs right now. Focus on those because we have them right now, and help your borrowers get into places. What do you think about that, Dave? Luna?
Absolutely. There are programs, but again, as Audrey says correctly, please understand all the underwriting guidelines, and don't just stop with just what you think, who are the lenders that are going to help you put those together. So it's kind of a two-part thing. It looks like property values are going up, which is super, super cool. And so one thing in class we're talking about in 2024, what people think loan limits will be. And so I think, in my opinion, loan limits will go up in 2024. So I asked people, when will we know what those are? Right at the end of November, we will know what the new Fannie Freddie conforming loan limits are. for the next year, and I think that's super cool. Another thing that worries me is insurance. Oh my goodness,
It's
Kevin,
getting
I think
rough.
Kevin, you mentioned it before about insurance companies. You miss that premium, they will cancel you.
Yep.
And
Mhm.
so that's happening more and more and more across the country. You have the Washington Post recently writing about, states will step in because they're going to have to, but will this bankrupt states? Think of the fires in Maui. Think of, fires in California, and
California,
then the rain, and then the
hurricanes, and
mudslides, and
yeah,
hurricanes. I was just in Florida. Idalia hit Florida, hit the Carolinas and things like that. And so insurance companies, what they're doing to kind of do a little self-defense is they're saying, well, we're just not going to cover certain natural disasters. And
yeah.
so you're going to have to get specialty insurers to cover natural disasters. They say, hey, if you have a kitchen fire, okay, we'll cover that. But if it's like a natural disaster, Kevin, like what you're saying, hurricanes, earthquake, wind, rain, mudslides, tropical storms, hurricanes, yeah, forget it. They're just sitting there saying we've lost too much money. In the last 3 years, insurance companies have paid out over $300 billion. So
Yeah.
far in 2023, it's been over 40 billion. If we just look at Maui, just the Lahaina area, that's $3.2 billion. That's just one town on one island,
Yeah.
in Hawaii. And so I think that's a concern that industry should be aware of and be a little bit more proactive. In the past, yeah, we'll get insurance. Well, that's changing, and so we need to be mindful of that as
We
well.
might need a, national, catastrophe insurance that instead of like a flood insurance, but cover not just
Right.
flood, but
Other
cover
natural disasters.
national disasters. So fire insurance would cover your house if your water heater caught on fire, but if there's a big fire comes through, like it happened to California, it happened to Maui, that would be under catastrophe insurance, and
Right.
do it that way.
Right.
We
Another thing,
talked about this literally every week recently, and most recently, the way we've been advising people is when you go into contract, before you go into contract, we get on the phone. I was on the phone with a realtor and the borrower. We were placing an offer the next day. We were telling them we need to be on this insurance thing immediately because
you are
before
absolutely right.
that,
Day one.
the insurance companies are some of them, like Farmers. Okay, we'll do 7,000 policies in August, but their 7,000 policies were used up by the first week in August. And it only works if you bind it. You can't get a quote and think it's going to be there when you go back. You got to bind that thing. So you got to commit to a close date.
Again, you are correct.
Yeah,
Absolutely.
and you got to bind it. You can't change your binding. Like, let's say you're going to close on the 5th of the month, and all of a sudden it gets pushed to the 10th. You can't go back and say undo it and have it effective as of the 7th, whatever you actually closed. You have to have it overlapping.
Another thing I think your audiences should be aware of is student loans. So from the CFPB this morning, they sent out a note that says beginning in October, these people that have not been making payments since spring of 2020 on their student loan, they're going to start getting reminders, hey, your student loan payments are due. But the CFPB also said there could be help for those that either are income related or some forgiveness, not necessarily at the federal level like a blanket thing that was being proposed. But I would direct the people to the CFPB announcement just this morning on student loans. And then for us in the industry, again, we're going to have to be looking at those student loan DTIs, as we always should have been, right? If they are no longer in school, we got to count that debt in our DTIs.
Well, the other thing with that is I was told there's going to be a ramp up period on reporting the student loan payments to the credit bureaus. So we need to do a little checking on that there might be a grace period of sorts where they won't immediately start showing reporting lates. But if you've got student loan payments, for goodness sake, don't mess around with that and hope for it. But we've talked about this for the last couple of months, letting people know that the interest started again when, Kevin, September 1st is when they were starting
I believe it started first, and our payments have to begin October 1st.
No, October payment.
Correct.
Yes, the October 1st is payments, but I think the interest starts accruing again in September. Was that?
I understand that to be the correct.
Yeah. So
I was recently in Las Vegas, And I was also talking to Dr. Lawrence Yun, who's the chief economist for the National Association of Realtors.
We've had him on our show.
Pardon?
We've had him on our show.
Yeah, and Larry was kind of talking about he's still feeling that we're going to see interest rates drop before the end of this year. So before we log off, I want to just give my opinion, bold, underscore, couple of exclamation points, opinion. And I may be going out on a limb here, but I really don't think in 2 weeks when the Federal Reserve meets again, I don't think they're going to raise rates. Yes, there are some indicators that are going in the wrong direction up, but there are many, many more indicators that are coming down that are saying the effects of all of those interest rate increases for this, past period of time have been doing their job. And so, okay, CPI ticks up, 0.1% higher than what it was previously. But you look at PCE and you look at manufacturing and you look at just everything else is leaning toward them not raising rates. I know even as recently as Jackson Hole, Wyoming, where again, very hawkish, speech from, Chairman Powell, where we're thinking, okay, here we have with another quarter and maybe we have more going on. I don't think so. Now, this is embarrassing if I'm wrong again, but hey, I'm human and I've been wrong in the past. I really don't think we're going to see more interest rate hikes, meaning I think even without interest rate cuts, which I do not think will happen, not in 2023 anyway, I think we're going to start, if the Fed signal that they're done raising, I think, Dr. Yoon is correct. We may see interest rates go down. MBA, Mortgage Bankers Association, is saying that by the end of next year, fourth quarter, we'll see rates in the fives. And so I just wanted to say to the audience, ladies and gentlemen, I think the worst is behind us. I don't think we're going to see, interest rates continue to 8, 9, 10. I just don't. And I think the Federal Reserve may be done. We're going to have to wait for 2 weeks and see what happens. So anyway, before we logged off, I just wanted to share that with everybody.
Just remember too that historically speaking, when the Fed raises or lowers the Fed funds rate, it doesn't, just because they raise the rates doesn't mean our rates go up. So in the past, there were often times where the rates would go down if the market thought, okay, they've got inflation under control. Oh, they've got things under control. Things are going well. So it is very possible for the Fed funds rate to go up and our rates to go down, depending on how the market digests the information. What is said and what the market thinks of what is said is just as important as what they do. So
Correct.
Are you leaving us, Dave Luna?
I am. I've got to go. I super apologize, but Anthony and I spoke this morning, and what Anthony's got to share is super, super important and super, super cool. And so I don't want to take away from any of his time or your time either. I'll hang around for just a few more minutes if you don't mind.
All right. Well, have a safe flight when it's time for you to go. So, Anthony,
before David goes, we're going to see David in the next little bit here. We got a couple classes.
So this week is Texas, and next week is Northern California.
Yeah,
over and over and over.
Oakland and Sacramento and Petaluma.
Yeah, right. We're going to be in Oakland with him next Wednesday, and then Kevin's going to Petaluma. Is that where you're going, Kevin?
You've got Sacramento, and then I've got Petaluma on Friday.
Yeah. So
Thank you, Joe.
We'll be all over the place with Dave Luna, and also Kevin and I are going to the National Association of Mortgage Brokers conference in Las Vegas. We're going to be looking for all sorts of interesting things to talk about on our show and meeting new people. So it'll be great. Are you going to be there, Dave?
I will not. Again, we're on the road, and so it's CE season. Everybody should have gotten their notes from the NMLS, and hey, your CE's not done, and hey, you got to get this done. And so CE season has officially started.
Yeah, well, I think it started a while ago, but people are starting to understand it. So this morning, someone posted on Facebook, someone very high up at a company, saying that there were less than 100,000 active licensed loan officers, which didn't sound right since NMLS was showing 238. So do you want to take a dive into this? Which one of you wants to take this one?
Oh, I'm super excited to take that one.
Yes,
and I just got a fresh, brand new industry report from the NMLS, which I actually just printed off and pulled up, and very interesting, the data that they released. And so this is an industry report as of last year, the end of last year. So this is as of December 31st, 2022. And so they released this kind of as a lagging, a couple months after the fact, usually actually, 6-7 months. And so very interesting, because the narrative has been, oh, we have a mass exodus, right? Rates are high, mass exodus, all, the world's falling, but that's not actually what's going on, which is interesting.
And in fact, I would say, how do they know there's a mass exodus? Because until someone doesn't renew their license, they're still a licensed loan officer, and that can't happen to the end of the year.
So,
yeah,
Anthony,
so let's
what were the numbers in December? Start there.
Okay. So this is really interesting. Let's take, I don't know, California. Okay. So in the state of California, there's 2 licensing agencies, the DFPI and the DRE, right? So let's take the DFPI. As of last year, current licensees, there was 65,275.
That was in California, DFPI.
That's the California DFPI. How many licensees were terminated? 12,145.
Oh, that's not a little number. Okay,
It's not.
That's DFPI. Wow. What about DRE?
This is where it's going to shock you, Audrey and Kevin. DRE, individuals, 23,833.
Wow.
Terminated, 2,604.
Wow.
Yeah, it's a DRE license is so much harder to get. Why would you, to terminate it, it's really big. You pretty much have to die.
Well, you would, well, if you lost, you'd want to die. But okay, so let's talk about the national level, because not everyone is in California. We have a lot of people in other states.
But what does that tell you? Those states are all DFPI licensed.
Yeah, so what does that tell you? This is your competition, right? So DFPI located out of the state, or located in the state, if your California DFPI is only 18,304.
That's what I was thinking.
Out of the 65,000. But for California DRE, out of the 23,833, 21,000 are located in the state.
Yeah.
Okay. So just think about that dynamic for a second.
So let's go back to nationally. So it looks like, okay, so how many were in NMLS as in the country at the end of the year?
233,224.
Okay, so that's pretty right on with what MMI was showing. Okay, so if there were that many, okay, so how often does NMLS update their numbers? Because maybe people have dropped off. Well, I mean, you only update once a year, right? So
yeah, these are industry reports, and the industry reports get posted periodically, usually 2 quarters out of the year. So, I mean, that's what's interesting is why is it interesting for the LO that's in the business that's staying with? You can tell kind of what's going on, where people are shifting, where states are shifting, locations of, where people are getting licensed. And so your competition.
So so I thought when this posting happened this morning, I thought, okay, well, maybe they're saying active license, like active. Maybe they're defining that by people have closed a loan. But I happen to know that in that particular company that, of the over 2,000 people they have in that company, a quarter of them barely have closed a loan in the last 90 days. So what is active license? That's this year, right? It's not really talking about whether someone's closed a loan. Does it?
It's not about closing loan. It's about whether you have an active current license. They've gone through the education requirements, the testing requirements, and it's turned on.
I don't know where people come up with these numbers and why they post them when
they're obviously false. Well, that's the press. The interesting thing though is, have you noticed that people are, and maybe the numbers will or will not reflect it, but I suspect there are some loan officers that are cutting back on their licensings. So if they're licensed in multiple states and they're like, you know what, I haven't done a loan in Florida all year or last 5 years. Why am I keeping that license? It's too much of a pain to keep it.
Yes.
Are you seeing that?
Absolutely. We're seeing some shifting going on where it makes sense, because remember, you have to pay the renewal fees. You have to pay the fees every year. And if you haven't done a deal in Oregon, why keep it? But we haven't seen people give up their license altogether as much as, the rumor has heard, that it's 30-40%. It's not that at all. But dropping states has been common. but also expanding out into states, because now, I mean, it's a lot of purchase business, right? The refis are kind of dried up, so that you're looking to expand out if, you know, you're staying with it and you're being more active in. And so you can kind of see that in the data. You can see what states, obviously Texas, Florida, there's a lot of movement there as far as moving, you know, getting new licenses over there. And so we've been seeing in Tennessee, another one. But that's really interesting. So as far as the education side, because we're everything education, so we can see, you know, if you don't do your education in a state, you're kind of probably going to give that up. And so we can see that on our side. But now with the data here, we're kind of seeing about a 10 to 15% dropout as far as just licenses being terminated. So that's kind of what we're seeing industry wide.
Okay, so let's walk through the deadlines, and you keep saying NMLS season. So tis the season. We started getting notices when July, Kevin, from NMLS going, you are naughty. How can you have not done your education yet? So as soon as we start getting those notices, we start talking about it on here. We're like, okay, people, let's go, let's get this done. And so so what are the dates, and what do we need to know? Just to remind us.
So I'm going to give everyone here on this call some insider information. So the NMLS
this better be good. Anthony, no clickbait. Okay, this better be good if you say stuff like
this
that.
Is inside information. So here's the thing. The NMLS every year in July, after the 4th of July, they turn the knob on everyone that hasn't done CE. So if you have an active license, they send you out this notice, and everyone on this call probably have got this. And it says that all of a sudden it's pending, your status. Kevin, what does it mean if you're pending?
Means nothing. Just means I haven't taken the test yet. That's all.
It gets people worried though.
Even after my continuing ed was booked, I got a funky notice that I sent to you, because I'm like, wait a minute, it says that you booked my hours, but it doesn't exactly seem like it's done. Like, so tell us about.
So they light a fire under every license LO starting in July, and so they turn the knob and they put you in a pending status, because it's pending whether you do your continuing education or not. Because here's the important dates for everyone to remember. November 1st is renewal season actually begins, meaning that you can renew your license November 1st, not your continuing ed. You can do continuing education anytime in the calendar year. You can do it on January 2nd if it's an approved course. Not very many people do it.
I was going to say, nobody has an approved course on
but
November
you can.
2nd,
so November 1st is the renewal period begins. So that's the renewal period. They give 3 deadlines for CE. It's called the SMART CE deadline. That is, if you complete your CE by December 8th, Friday, December 8th, you're solid in most states. There's some states that have early deadlines, like Georgia. Yeah, Georgia is October 31st.
October 30th. Okay, well, that's only a day before.
Like one day before, Kevin. It's not exactly
a big deal.
And so, but there's a handful of states. I think it's about 15 that have earlier deadlines. But they give you the SMART CE deadline December 8th, and then Friday, December 15th. So a week later is the at-risk to miss renewal. And then you have December 29th, which is the guaranteed to miss your renewal. And surprisingly, we still get.
You're too stupid to do loans deadline.
Wait. Yeah, say that again. What's the date? You guarantee you're going to miss your renewal period?
This is actually what it's called. The guaranteed to miss renewal is December 29th, which is Friday. So if you
really, again, obviously, somebody's asking what Florida's deadline is.
Florida's is the end of the year, as far as when you need to complete it by, but that would follow the same cadence, the 3, December 8th, December 15th. All this data, you can look at the NMLS Resource Center website under education requirements. And so you could pull up, your state. So in Florida, they have, technically until the end of the year, but don't put December 31st in your mind. Put December 8th.
100% agree
December 8th in your mind.
Wait, shouldn't they just all call your cell phone at like 10 o'clock at night? Isn't that the best way to find out?
Yeah, for sure. Yeah. What's that cell phone number again? 951
867530999, right? Okay, let's talk about this, because this is blowing my mind. So let's talk about the resettlement. Remember the ding-dongs who didn't do their continuing.
What was resettlement, for those who don't know?
What?
What was the resettlement for those who don't know?
Oh, right. So why don't we
Yes.
let Anthony take this? Anthony, why don't you just
Oh, I would be
walk through the
happy
whole
to. I
thing?
mean, so this is
Yeah.
the integrity of the education. So you as a loan officer that's licensed, you agree to do the required education to get the license and to renew it every year. And so you actually attest when you fill out your application and then your renewal every year that you have done the required education that's in this from the SAFE Act, Secure and Fair Enforcement Act, and that all the states have adopted. And in so doing, you agree that you've completed the minimum requirements. So in every state, you got to do 8 hours, right?
Mhm.
And so
This
we
is
have
big news to some of our listeners, I'm sure, who thought, what do we have to do every year? Oh, wait, did I take a 20-hour class, not an 8-hour class? Like that actually, we've talked about this where the woman called me and said, I went to renew and it says I haven't done my hours. And she's like, I did. And then she's like, oh no, I took 20 hours. And now I'm like, wait a minute.
Huh.
She had somebody take that 20 hours for her. And again, I want to say that because of
Not a good idea.
what Anthony is going to tell us is happening. It's just mind-boggling. So did what?
people cheated. People took the shortcut. So they found a provider that's no longer education provider, and they would call them up and say, I need to take this education, that education, and they would pump out the certificate, and they didn't actually complete the required hours.
Right.
They got caught. This was a large group of loan officers, over 600, okay, that did this. And the states, and there's still repercussions that we're going through as a school with these individuals, because we're trying to help them out, getting the required education, even up until this point. And so the resettlement was a settlement that they came up with that said, you cheated. Here's what you need to do to reactivate your license. It was very costly, $1,000 per state fine. But the biggest part wasn't necessarily the money, it was the time that they had to suspend their license for over 90 days. So you couldn't do business for 90 days. You had to reapply in the states, pay $1,000, do the education over again.
And
Right.
not all states are accepting these applications?
But I had said that they should have to refund the money from all the commissions that they earned when they were not properly licensed. So I thought that $1,000 was cheap, like really, 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 really cheap. And this was in multiple states, right? Not just California.
Yeah, no, this was nationwide. Yes, that's correct. So
Okay.
a lot of the loan officers were located in California, but it was nationwide. Yeah, it was as a nationwide, basically a scam. But what was interesting is what you learn about every year that, you kind of in class under federal law, that you have to command the confidence of the community. These are requirements, standards that you have to, as a loan officer. That's what they used in certain states to deny the license. It was very interesting because we just dealt with this last week with a client.
Well, hang on. I want to make sure this was super clear. So these people were busted. They get a letter from the regulatory agency that says you have been identified as one of the people who cheated and lied, and we are reviewing this, and we're going to come up with a naughty list, and you're on it. Well, and then we're going to figure out what your punishment was. And then they came out and they said, okay, you're punished, like you were saying, $1,000 per offense, per state, whatever it was.
Right.
And then you were going to be suspended for 90 days. You couldn't do loans for 90 days. And then you had to go back to your 20 hours through some special thing. Like they couldn't just take a regular online 20 hours. They had to do some in-person special.
Yeah, they could not do online. They had to just do live in person or live webinar. So they adjusted the format of the education.
Okay, and then they had to do they have to do special 8 hours, etc. But then they had to reapply or something, and that's where we are right now. This is what you're talking about now, right?
Correct. So they had to go and reapply. Remember, in the SAFE Act, the states have the ability, because they're the licensing authority, to make a judgment call on your situation on your license. So they can approve, deny, withhold. They can do all sorts of things. Remember, this is your continuing education because they cheated on CE. Moral of the story, don't cheat on CE. You have to do the required hours every year. It's not worth it, okay? As far as timing, everything else, you got to sit in the seat. You got to complete it. It's required. So they go and they pay that. They agree to the rules or the resettlement. They have to redo this education. What we found was some of the states, actually several of them, denied the license. So they went through it, they paid the fee, they did the education, they reapplied, and they got denied. And so I'm actually looking right now, this second, I'm looking at a final order of denial for an application for a mortgage loan originator, and because they cheated on their CE. And it's really interesting. So this is what it says. And again, we're not naming names or anything like that, but this notice provided that the department, so the state licensing agency, intended to deny the applicant's mortgage loan originator application on the grounds that the applicant had not demonstrated financial responsibility, character, and general fitness, such as to command the confidence of the community. That's literally what it says.
All right, so here's the big $1 million question. So which state was this decline them?
Georgia.
Georgia. So Georgia declines your license. Does other states talk to other states? Does that then trigger a domino effect? Even though he went through all the motions, would having one state decline your registration, would it trigger over to other states?
Yeah, so here's the thing is other states, they have limited resources, or they may not get to the application. Maybe they approved it initially, but what we're finding is when they do get to it, as far as like the next renewal, they can base their approval or denial on other states. So if they said, oh, Georgia found that, because, commanding the confidence of the community in one state, it applies to any other state. And so they can base their denial on the other state. So again, it can be a domino effect. It can for sure impact your whole license. And remember, the borrowers, the consumers, can go on the consumer access and they can look at these final orders. So, I mean, you're talking to a borrower, how are you going to explain this to them? I mean,
yeah, well, you can't. I mean, other than I can't be trusted to your loan, there's no explanation, right? And so when we're teaching a class and we're like, listen, people are whining about 8 hours. You know what? Suck it up, Buttercup, because it is only 8 hours. You don't.
She literally says that. Suck it up, Buttercup. We're sitting here in roll hours. She'll make them sit for 9. Sometimes they complain. No.
All right, I don't.
Hey, I wanted to add a little thing about that. So these people that I lost my track with this. Suck it up, Buttercup. The people that lost their licenses. Let's see if I can remember what I was going to say on it.
Well, and I'll just point out too that there was another, it says later on in this final order, as further reason for the intended denial, the notice provided that the applicant, so the loan officer, may in part prohibits making false statements or material representations. So they're saying that you make a false statement because you didn't complete your education. And so when you attest every year, you go through the check boxes, you're agreeing that you actually did the education, you sat for the required hours. And so they pull that up as a way to say, that's, you've been denied because you didn't do it. You made a false statement. So think about that as a borrower. Wait a minute, you made false statements? What does that mean? I don't trust you. So like it's a domino effect all around, not only for your licenses, but for your business.
And now I remember what I was going to say before I got interrupted with Buttercup there. When I refer loans out to other states, because I'm only licensed in California and Oregon, but I can refer stuff within my company to other loan officers. And when I look for someone whom I'm representing, I always pull up their licensing history. And I remember one time there was 2 guys in an office. There was one office that served this particular little town in Arizona where my clients were moving. And I pulled up the office. I was like, okay, which one of these guys do I give the referral to? Well, one guy had his license lapse because he didn't take his license on time one year. I'm like, well, he's an idiot. Why would I refer to him? I mean, it was that simple. It's like, it's public record. Don't show public records that you're an idiot. What more can I say?
So we have a comment from Dirk, who said, isn't this the premise of the TV series Suits? And Dirk, I'm only on season 4. I don't know everything that's coming, so don't ruin it for me. But in that particular instance, you have an attorney who's acting as an attorney who isn't really an attorney. So it is kind of similar if you really think about it. I forgot about that. Yeah. I mean, yeah.
But attorneys can legally lie. That's the difference.
Oh, is that the deal? I see. Yeah, no, what I'm seeing is you can have people, not LOs, but you can have people in the mortgage business, and they seem to be all over the freaking place, who have positions of authority. They're holding, they hold positions in companies as leaders, but they're not they're not licensed MLOs, and they have just gotten out of prison. They've been convicted of mortgage fraud. I'm like, I keep saying we need an NMLS for everyone in the business so that you can track some of these people and keep them out. So before we move on to the next thing, I just wanted to say, because Kevin thinks I don't give him enough credit. Used car prices were down last month, and Kevin called it several months ago that this is going to happen, and it did. Okay, are you happy, Kevin?
It's gonna get better.
Used car
wait till
prices
it's
are
first.
coming down. You heard it here first, okay? Well, maybe not first, but actually, maybe first. Kevin has been calling this for a few months. It did happen. There you go.
Good call, Kevin.
I know.
When student loan payments start kicking in, how can they afford a car? It's that simple.
Well, yeah, I think he went a little deeper a couple months ago. He probably forgot because he's, old. So, anyway, here we go. So, let's see. Anthony, temporary authority. Tell us how that is working on the ground. And first of all, start with temporary authority rolled out a few years ago, and how does it, talk us through it, okay? Because that's
so basically this is a way that if you come from a bank or credit union, or if you want to expand into another state and you want to start doing business in that state, they've come up with temporary authority, which is giving you temporary authority to actually originate while you're getting your licensing. And so the two keywords you need to know are granted and eligible. So granted and eligible. So the way that you go about doing this is you apply as if you're applying for another state. And so go through the MU4 process on the NMLS. And then if you're eligible, you'll be granted temporary authority to start originating right away while your licensing is being processed. The state can take up to 120 days or more, depending on, again, the resources. And so they can be quicker, they can take longer, but they'll let you know that. And then you can, in the meantime, so there's no lag, there's no skip, there's no issues as far as you not being able to service your borrowers or your clients in that state. But my business partner, who's an attorney here, she just brought up to me this morning, you can't start originating until you're granted that authority. And so you can't start taking loans, you can't start talking to borrowers, you can't quote rates, you can't do anything until you get that granted that authority. And so there's important eligibility requirements. You have to, like, if coming from a bank or credit union, you have to have a certain amount of time in the industry. I believe it's a year. There's a whole list of requirements of eligibility. But this is a way that allows you to expand quicker in a certain state. Temporary authority.
Yeah. Well, and just again, we had somebody on not too long ago. I shouldn't even say a time because I can never track time. Anyway, who really is talking about expanding licensing to other states and making sure that you're a resource in all these other places. And our suggestion to them was always call mortgage educators and make sure that you understand what the rules are before you
go through all the steps.
Yeah, make sure you understand
and the risks, because there's risk with it.
Talk about that, Kevin. What do you mean?
So for instance, I got my license in Oregon, and with the temporary authority thing, I thought, okay, this should be no problem. I had 2 huge loans. I thought, well, this is great. I mean, I might as well do it. And it turns out that it took so long, not just to get your license. I had to take 2-hour Oregon 2-hour course. I think I had to take, and then
4 hour.
Yeah, it was pretty simple. 4 hours. Yeah,
exciting. You only paid attention for 2.
Yeah. Well, it's a 2-hour renewal. That's why I got the mix up.
Yeah. Before Head and Shoulders were required in the picture, so.
But so I applied, and I knew the loans were closing like in January, and so I thought, okay, that's perfect. I'll apply and I'll hold off. Well, no, I couldn't. It took them 100. You have a 120-day grace period where you're supposed to be able to practice. No, it took them like 140 days to actually secure the license. They take longer than 120 days on their side. That's after I did everything, did my re-fingerprinted, re-credit report check, everything was redone again, and still took Oregon forever to process the license. Yeah, so it's not simple, not fast.
Okay, so I meant to ask this last week and I didn't, and I was remiss. So I am asking anyone in the who's listening, have you had an EDD audit? And if you did, were there questions around contract processing? How did they look at it? And do you have resources for people as far as hiring someone, either, I don't know, to represent you, to advise you, is there something out there for EDD audits? I have somebody who's asking, they're going through one and they have concerns around contract processing, which, I mean, a contract processor in my mind just seems so obviously okay. But anyway, if anyone knows anything about having an EDD audit, will you just ping me so that I can pass your resources on to my the listener who was inquiring, pretty please, unless one of you people know something, Kevin or Anthony.
I will also, and when I get back to the temporary authority, we were talking about getting licensed in other states before I started telling my story about Oregon. So, because I asked Anthony about like getting licensed in a couple states this after we had our guest, is it Troy Nugent, Twan?
Yeah, I see it. We have a couple listeners who have chimed in who've said they've gone through them. One of them I know, so I'll reach out to him and find out what his experience and resource was. But if you want to email me at audrey@mortgagepros411.com, just so I have your contact information, that would be
Right.
great.
But if you have to be in order to get licensed in more than one state, if either your company has to be licensed in those states, or they have to not be licensed in that state, and then you have to go work for a separate company, but you have to apply for an exemption. Is that correct, Anthony?
Yeah, so the rule is, and this is again what you learn every year in continuing ed, that you can only be licensed under one company. That's the rule in every state. But you can apply for an exception if your company does not do business in that state. And so, I mean, think about it as the consumer. And so, well, your company's licensed, but I want to be licensed in a certain state, but I want to be licensed under this company in that state. It's confusing. Who are you representing? And so that's the exception that some states allow. And so you got to apply for it. You got to get approved for it. And so the rule is you can only get licensed under one company.
And then, but you have to go through all the steps. You have to take the class. You have to have your fingerprints taken, rerun the credit reports, apply to have your license there. And then they get to the state gets to decide, and they could say no.
Absolutely. Yep. They can absolutely say no. Yeah, they can decide it.
No reason given.
I'm just the state who just says no.
Well, remember that story that, you know, that person went through all the steps, applied, waited the period and got denied.
Right.
And so those are non-refundable fees. It's I mean, that's how it works.
Well, and by the way, you have to go find another freaking career. I mean, let's talk about that. You're 500 years old. That's all you've ever done your whole life. And you're a ding dong who's like, I'm too busy to spend 8 hours on a career where I make hundreds of thousands of dollars a year. Okay. And then now
you become a dishwasher.
What the heck are you going to do? It's ridiculous. Like, and so I'm telling you, my patience with people who are like, when are we getting out of here? I mean, I don't mind the question, when are we going to get out of the class? That's fine. But once they tell you, don't whine that's the deal. It's the deal. You're here for 8 hours. Deal with it. It's fine. We're going to have a great time. Great time. You understand me? Just kidding.
So we just had one of the comments about company licensing. So company licensing is different. And we help with company licensing as well in our compliance department, but it is different than individual. And so, yeah, we're talking about individual licensing here. Company licensing is different. There's a lot more requirements, a lot more on the checklist. There's, surety bond, business plan, there's net worth, there's origination experience. There's a bunch of things that you have to do to get a company license as well. So if you're kind of an owner broker in a given state and you want to say, hey, I want to just jump over to another state, yeah, it's a different animal with company licensing.
So I got a final question for Anthony. Each state has different renewal requirements. I was really surprised. Like California, it's 7+1 for a total of 8. But other states are 8+2 or 8+ something else. I believe New York probably has one of the highest ones with 13 hours or something like that. Am I correct?
It's 11 hours. It's 8+3. And that's in the state of New York, 3 hours state specific. New Jersey is 8+4, but part of the 4 can be, other states. electives can count towards that. Some states like New York, they say you can't count any state elective towards their 11 hours. And so it's, you have to do a full 11 hours. You have to do 3 hours of state law and then 8 hours with a general elective. So there's, again, give us a call, reach out to mortgage educators. We can navigate you. We can help you go through any of these scenarios. But when we get calls at the end of the year, oh, I'm missing an hour. What do you mean? You don't want to wait. So
wait.
Yeah.
And by the way, I just want to point out that Kevin wanted to talk about individual licensing and company licensing for the entire hour, and I ixnayed that, so you're welcome, people. And secondly, thank you for the people who put their comments in the chat and give me some people to pass this person on to as far as getting some help. My email again was asked for, audrey@mortgagepros411.com. And so anyway, it's in here. I never get tired of talking about this. CoreLogic loan performance. I just want to throw this out there at the last minute because it's so good. 30-day flats at 2.6%, 30-day lates. People who have 90-day lates, we're at 1%. Again, very stable. Foreclosures are at 3/10, which these are like historic lows, all of them, and they've been very consistent for the last, I don't know, year plus. So anyway, so our loan performance data is really, really strong. That's kind of the bright point for me in all of this. As you know, we got the BLS jobs report last week, which I think I was pretty clear. I think I believe should be called the BS jobs report. So if the market seemed to digest it all right, it was not as great as they were expecting, and unemployment rate went up for a myriad of reasons. But we're in the red again today. So just find loans that aren't so rate sensitive and talk about payment. That's really, really the takeaway. And with that, we are going to be again, teaching NMLS next week, Kevin. If you're at NAM in Las Vegas, let us know. We'd love to see you.
Come and say hi.
Yes, for sure. And then we're going to be teaching in Thousand Oaks on September 22nd. Yes, I believe. So that'll be a live class down there. That's always a fun one. So anyway, with that, everyone, we look forward to seeing you next week. We will have Megan Anderson with MBS Highway, and she is going to be talking about AI in our businesses. And she's going to do it in a way where you don't want to like jump off a bridge. So she's going to help us really incorporate it into what we're doing. So that'll be great. And then we've got some great people coming up in the next few weeks. So with that, Anthony Johnson, thank you so much for coming and joining us today. It was great. And thank you for all you do for the industry.
Thank you.
If you have mortgage licensing questions, do not wing it. Just start with a phone call to Anthony and mortgage educators, and you'll be in good shape. So with that, have a wonderful week, everyone. Talk to you later.
Thanks, everyone. Appreciate it.
Bye.
Thanks for having me on.
Thank you.
Hey, guys.
Bye.